Good evening and welcome, guests and members. This is our monthly meeting of the Model Investment Club International. We're a better investing model club open to the public. All our meetings are held on Monday of each month at 9 p.m. Eastern or 6 p.m. Pacific. The exception being December, when we meet on the second Monday of the month. All our meetings and stock studies are held online, allowing us to have members from around the world. Our current members are from the United States, Canada, and China. An added and unexpected benefit of meeting online is that we're naturally socially distant and self-isolated. Guests, you're going to be observers for initially during the meeting. You'll be muted, and you'll have an opportunity for questions and comments once the meeting ends. I'd like to just mention that any companies that we mentioned today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. And we may mention during the meeting products or services that are not endorsed by Better Investing or this club. The views are expressed are those of and do not necessarily represent those of Better Investing. This meeting is being recorded and will be posted to our YouTube channel for future use. And with that, Joanne, I can present the treasurer's report. I think Tom is away today, so I can I'll present on his behalf. Can you make me a presenter, please? Okay, thank you.
Hold on a second. Okay.
Can you see my screen?
Yes.
Okay, I'll just make it larger. Okay, so this is our portfolio valuation statement. We have 14 securities, and the second column is when we first purchased them. So a lot of them were purchased. The club was started in 2016, and we've purchased at various times, and some of these have been purchased more than once. The third column is the shares owned. You can see how many shares we have. The average cost per share, the total cost, and if you see a number that's more than $1,000 for total cost, that means that stock was purchased more than once. So you can see Facebook 4,000 and Walt Disney 4,000 as well. Then this is the current share price as of I think yesterday, I believe. I could be wrong. I can't remember exactly. And then the market value, and then the percent change from when we purchased it. So BJ's Restaurants, even though we purchased it fairly recently, it's gone down quite a bit at minus 43%. And the compound annual growth rate for that purchase, that's an extrapolated number, is about minus 75 if it continues like this. So the ones in red are the sort of the ones that are negative, obviously, and then we have quite a few here that are also in the positive. Overall, because of the market downturn that we've seen recently, we're only at 2.58%. Up to that point, we were doing quite well, and we were beating the market about, I think, about 20-25% return. Let me just go to the next slide here. This bar chart shows you our holdings as a percentage of the total portfolio, and right now our major position is in cash at about 27%, and Algonquin Power, which will be presented today by Joanne, and Disney and Facebook and Skyworks. Those four are the major holdings that we have. So that's it for the treasurer's report. I have a couple of recommendations based on recent events. So next month, I think Bernard, Mina, and myself are doing a stock study, but I think we might want to consider, I'll put this for your consideration, is, to set up maybe 3 small teams, and to have one team look at our portfolio and make some buy, sell, or hold recommendations over the entire portfolio. And then another team perhaps to study healthcare because and a third team consumer staples, and those two because they're I think they're they're 2 areas where we might see recovery a lot faster than some of the other areas. So those are just some recommendations. And that's the treasurer's report. Any questions?
Hanny, what about at stocks that are on our watch list?
That's a good question.
Weren't those stocks that
list?
weren't those stocks that were identified time as being having good fundamentals but weren't in the buy zone?
Yes, I'm not sure if we've been keeping that watch list updated.
I don't recall these companies.
No, these are ones that I put in.
Manually add them.
Oh.
I put these in. I put these in my iClub, but
we have under Google Drive. I can pull
okay.
out. I don't know. I don't believe recently we have any, but let me click it.
Usually what we add to the watch list are stocks that were in the stocks that were deemed as having good fundamentals but not in the buy zone, so they're put on a watch.
Okay, have we been updating that, Joanne? Because I don't recall.
No, I don't think
it.
we've had any stocks recently that
Okay.
had good fundamentals. So
right, not recently. I have seen that the last one we had a Visa, we had 2 healthcare, ILMN, and then the other was biotech, CBN, SGC, consumer cyclical, and Air Lease. Well, I guess we have Air Lease now. We bought Air Lease. We have not updated. I thought a Costco was on the watch list, but apparently it's not. We probably did not update the watch list.
Okay.
Well, at some point, I mean, if we're going to be doing these secondary teams, we should probably have somebody looking at the watch list.
Yeah, the last time updated was
good
June
idea, though.
2019.
Yeah.
I think Bernard said he's muted. Let me just.
He's self-muted, but now you are self-muted.
Hi, Bernard.
I'm back. All right, thank you.
Yeah, hi, Bernard.
No, I got somehow or other my camera. I'm on the picture here. I don't want to be on the.
Right, you just close your camera.
How to, oh boy.
I'll shut your camera off.
Yeah.
I don't know how
to do that.
Okay.
Don't worry about it. Okay.
I don't know how to do it.
I turned you off, Bernard.
Okay.
All right. So, Hanny, what's okay?
I'm back.
So,
but Joy, that was a good point. Just go back to look the watch list, since those are the ones already did a study and are documented. The first
well, do you guys agree with that, or is that something that we should do? Do you think, or because I think my thought is that we have some stocks that maybe we've bought a little bit too quickly without doing a thorough analysis on in a couple of cases, and there may be now some, and then there's also some stocks that we have that are perhaps don't have very good growth prospects going forward. So maybe we could swap them out with something that's a better quality and has better growth prospects and is
right. I think Joanne's point not really saying next month. correct me if wrong, Joanne, what you meant. I think probably you meant that the process of looking for stocks to study is the watch list is also a way of, to reevaluate these stocks, because in the past, the members already did depth research to present it. It was just was not in a buy range. And so perhaps it was saying that to go back to look again. However, now I remembered why that watch list has not got updated, because we wanted to invest and we ask members, say, hey, if this company, when you do research, was not in a buy, don't even bother to present. I think we had some sort of a conversation like that. So probably that was another reason that we have not updated the watch list. Do you remember that, Joanne?
Well,
No, but
No, you don't remember. Because I remember a couple of times,
Jay,
couple meetings in a row. It was
regardless,
not
I
in
think,
any buy.
yeah, regardless, I think, there's an opportunity right now when we have cash, but
Oh,
if
yeah.
we, if we wait too long, we might miss the opportunity. So I'm just suggesting that maybe we speed it up a little bit by having a few small groups that would look at these various areas, or perhaps, look at those things on our watch list.
When you're talking about the team, are you referring your next month's stock study, or are you referring the club as a whole?
No, the club as a whole. So
Okay.
Bernard, Mina, and I have a stock study that we're looking at for next month. We should, in parallel, we should maybe have two small teams.
Oh, I see what you're saying.
Look at three actually. One to look at the portfolio and see if there are certain stocks that we should drop and make room for these other two areas, or maybe there's a third area, I don't know, but I'm just making the suggestion that we look at healthcare and consumer staples. And then a third area could be the watch list ones, if they don't fall into those two categories.
Okay. I don't suggest, sorry, Henny, I totally misunderstood the way you present that team. I thought you just meant the next month. I think good idea to focus on our current portfolio and to reevaluate, like you said, what's in growth, what's not, and swap them out. I don't know if introducing you is, I'm not sure. I think a clean house is looking at our current portfolio could be
right. But if we remove certain stocks from the portfolio, then because we have a lot of cash right now, we should replace them with something else. Right.
How about three teams? Three teams, the current portfolio, the watch list, and one of those two sectors, Annie.
Yeah.
Sure.
Okay.
Yeah. I'm
just maybe.
Yep.
Yeah. Okay. All right.
Henny, essentially, are these going to be multiple stock studies?
I was thinking, yeah, like if you do healthcare, then you're going to look at, say, the top 2 or 3 companies in healthcare, and whether you present all 3 or not, or you could present them at a different level of detail. But yeah, it would be, if we're doing, say, the watch list and 1 or 2 other areas, then you do multiple stock studies, pick the best one.
Might not have time to do 4 groups of stock studies. I'm concerned about time.
Yeah, I'm not necessarily suggesting that we present all of them, but just so you go through and you do, say, healthcare, and you're going to screen out a number of companies and so on, and you might settle on 1 or 2, and then you'd present that.
Okay.
So I'm not suggesting that we do.
Well, we can take this offline to discuss. It's a new format, so let's parking lot this and talk about it later.
Sure.
Once the meeting's over. Okay.
All right. Okay. I guess the next item is I don't have the.
One more thing is, I think this is.
Sorry. Yeah, Bernard, go ahead. Bernard?
Well, this would be a chance too to get a few more small caps, hopefully,
Right, exactly, yeah.
because we
Exactly.
don't have very many in the club.
Right. Yep, that's a good point.
I'll be delighted to work with you, Haney, and whoever the group. Might need emails or something to tell me what to do, but I'd be glad to work with you guys and do stock selection. I think it's great. Thank you.
Well, you and I and Mina are doing a stock study for officially for on the agenda for next month. So I was just thinking, in addition to that, because the market has taken such a drop, this may be a good opportunity to look at a few more and sort of fine tune the portfolio.
Yeah.
But anyways, we'll talk about it offline. Okay, so Joanne, do you have the agenda? What could you just maybe the next one is the next topic is the reports.
Right. Henny,
Okay.
is that your screen? Your
Yes.
mouse is over your meeting agenda. Can you just tap that meeting agenda? Yeah, that one.
Oh, this is it? Ah, there we
Yes,
go.
that's
Sorry.
it. Okay.
Uh-huh. Okay. Thank you.
Uh-huh.
Yeah, so these are the the reports that we have due this month. We have quite a few people that are missing today. So Tom and John Dennis, I think, and who else? Matt. So why don't we go through these and then we can pick up the ones that are missing maybe later on. Is that all right?
Yes.
Okay, so I'll start with IPG Photonics, and where's my report? I had it here. Okay, there we go.
It's up on.
So yeah, it's right here. So IPG Photonics is a company that makes industrial lasers, and they use these lasers in manufacturing process, things like welding, brazing, and other material handling operations. Sorry, I have a bit of a cold, so excuse my raspy voice. They fall into the semiconductor equipment and material under the technology sector, and their current fiscal year just ended recently, so this is an annual report, and I could go through the whole thing, but I'll give you the bottom line is that these guys they're heavily reliant on China. China makes up about maybe 35% of their market, and then they they have 5 customers that make up about 20% of their revenue. They also do a lot of business in Europe, and they've been struggling recently, and you know their stock price has taken a bit of a hit, and I'll show you that in the SSG. So my recommendation is they were a very high growth company, and their earnings have been falling steadily, and their debt is increasing. So I think that you know more importantly, I think it's what's going to happen going forward. They have a lot of business. They do a lot of business in Russia, China, and Europe. A lot of Eastern European countries. Western Europe, they are big in Germany. But I think just with everything that's going on, and for the foreseeable future, I think their earnings are gonna take a big hit. So I'll just show you I did an SSG. And they're you know their prices dropped quite a bit. Their earnings are dropping. If you look at the quarterly data, since 2017, the price has been going down, or sorry, the earnings on a quarterly basis have been going down. And I've listened to the conference call and looked at their annual report, and they have given guidance that they see a fairly challenging time going forward. The other thing is, when they first came on the scene, they were, you could see they were growing quite rapidly here. Their sales have been increasing, and they had a lot of IP, new laser technology that was not available anywhere else. And now a lot of that has been copied, and they're starting to see a lot of margin pressure from their competitors lowering prices. So just it's a compounding effect, lower margins, a lot of the trade issues that we hear about, the borders closing, the fact that they have a lot of business in China, Russia, Eastern Europe, and then on top of that, they have a high concentration of revenue coming from 4 or 5 customers. So very sort of concentrated risk, both in terms of geography and in terms of customers. So I'm recommending that that we sell, but we'll just go through the. So here's my SSG. Well, first of all, I said I forecasted about 5% sales growth, and then using the preferred procedure that gave about 7.6% earnings.
Why did you use 5%? What was your reasoning to choose 5?
Just based on things that I was reading, and some of the numbers that they were guiding in their on their conference call. It's actually more than that, but I was trying to be conservative.
Are you saying that 5% was company's guidance?
No, it was just based on what they were. I took what they were guiding, and then I ratcheted it down.
Okay. What was their guiding? Do you remember?
I don't recall. It was, so they didn't give a percentage, but and then I looked at Value Line as well. I looked at Value Line, Morningstar, and a few others. So I came up with 5%, and then used the preferred procedure. On the second page, I took out a high PE at 39 and 54, and I'm trying to remember. Yeah, I used the PE of 26, which is the 5-year average, and that gave a high price of 128. When I did this, which was on the 7th, was 127.61. I'm not sure what it is now. I can check.
Probably it's lower.
Yeah, it's probably lower. And then I used 20%, which is my normal sort of low price. So it came up with a sell.
Henny, you just started following this company, correct?
Yes.
This is our first report for this company, yeah?
That's correct. Yeah.
Okay, because you mentioned something very interesting. I did not hear from the previous follower. I think Matt and Mina both follow the company. You were talking about, because this company I had it for a while. You were saying that right now that technology was being copied by other competitors.
Yes.
So that was one of the major reasons for the price kind of drop.
Yes. Yeah.
Because Okay.
So, and
Wow,
they
this is huge.
actually mentioned that in their annual report. They mentioned that in China, a lot of their customers that were buying their lasers are now developing their own lasers and cutting them out. So usually these manufacturers will buy certain production equipment from various vendors, but if you can integrate all of your supply chain under one roof, that you can get some economies of scale and so on, and savings. So they were saying that some of their Chinese customers have started to build their own technology and not go external. And then some of the other competitors have been lowering their prices, and they're facing a lot of price pressure. So they didn't really, I think, for they were looking at a number of compounding factors, the trade war issue, competition, customers developing their own IP. So I just you can go through these SSGs and put various numbers in and come up with anything, right?
Right.
I just kind of read the backstory and said, okay, well, I don't see how these guys they might do okay, but maybe there's a better option, a better company that we should be looking at. I don't see how they're going to grow given these challenges.
Did they mention anything about the growing? How are they going to grow? Are they?
Well, they were guiding lower in the next couple of years because of these issues.
Annie, can you
Now
update?
they are on the positive side. They spend, they do a lot. So the guys that run this company are all PhDs from Russia, and they worked in this industry in Russia, and then they came to the United States and started this company. And they have a number of patents and so on, and they believe heavily in R&D. So I think over time, if they developed, if they had unique IP to begin with when they first started, it's not unreasonable to think that they could do it again, and they could innovate and transform, their product lines.
Hanny, can you just interrupt just for the sake of time, because we have like a bunch of other annual.
Sure.
Okay, can you do a quick update the data on this? Over 10 days old.
Okay.
Yeah, today's 105. Using that data is already sell, but yeah.
Refresh study data.
It doesn't change much.
Overwrite or create a copy.
Create a copy, yeah.
That company has so many different applications in different areas. I have to research more. I remember the last time I mentioned that it was because the trade war impacted the price dropped. I did not hear anything about this copying thing.
Okay, thank you
So
for updating that. Okay. We can move unless anybody else has it. I mean, I think we should hold questions till we do all the annual reports, and then we can come back if people really want to quit. I mean, because your advice is to sell.
Right.
So we can discuss that during the voting.
Okay.
If there are questions then. Okay.
Okay.
Jay?
All right, next is me. Okay, I will make myself a presenter. I'm giving a report to FleetCore Technology. This is my first annual report for this company. I just took over from someone else. So it is a software infrastructure industry.
Jay, did you and I do this company initially?
We did. You and I, we studied, we presented this company.
Yeah.
And for some reason, Oh yeah, Jane and I swapped. Jane was, yeah. Anyway, yes, we presented a couple years
I think
ago,
that, yeah, I think that was
2017.
one of my first SSGs. I did it with you, I think.
Yes, 2.5 years ago. And
Yep.
so as you can see, the first we bought twice. The first time we bought was September 2017, bought at the $151 share, and then we bought again just about a year ago at 205. And so I prepared this report before I left to France. It was March 4th, and then 2 weeks after the price dropped again about 10 more percent. So that's why today I have to update the 52 weeks low again. But anyway, so this company, let's see, I don't want to go over the line by line, but just want to hit the highlight of revenue growth. Compared to last year, it was 9%. And current assets, current liability, they all, the ratio is almost 1-to-1, a little bit over 1-to-1 compared to 2018. I guess it's a good thing. Numbers higher. Free cash flow. I couldn't find the free cash flow in their 10K, but what I did, I think I got them from the Morningstar. What they have is cash and cash equivalents. But I did later on, I researched how to calculate free cash flow. There's a way you can do it. I'm so sorry, I did not get a chance to figure out because they were not in the Q 10Q. So I just put down 10K what I found from Morningstar. There's one thing that I made a change about the sales projection. For last SSG was prepared by, I don't know who, was a different member, whoever presented, was 6%. I made a change to 15%. The reason was I prepared this report 2 weeks ago. Reason at the time, the company just finished March 2nd, gave a conference to shareholders. They have a guide. They provided guidance is about 15 to 20% annually, and I just took a 15% as because we have this company for a while, and I felt that it does well for us, and it just keep that confidence going. I decided to give forecast change from the previous was 6% to give a 15%. And so, and then for the earnings, I think I used the preferred procedure, which we can take a look at very quickly in the SSG in a second. For the management, the pre-tax profit, return equity, and debt, that went up, and pre-tax profit and return equity, they were both up, which is a good thing. That went up because they had a couple of acquisition. They did give a guidance, as I mentioned, in a 2020 conferences, they gave about 50-20% annually. And they acquired a couple of companies, one's in July, one's in March. And let's see, what other things about this company I want to talk about. Oh, okay. I want to talk about the fuel. So as I say, they have a few in their revenue. There are 5 categories. One's a fuel, one's a corporate payment, tolls, and lodge, and gift cards. So fuel obviously is the major. It's 44% of the revenue. So Matt emailed say, hey, what's the impact of what's the what was he asking? The price for gallon per, I cannot find the fuel price, but however, that was 2 weeks ago when this was prepared. But now obviously we know the oil price was, very low. And as company is one of the risks about this company mentioned that, declining the fuel pricing will impact their revenue. So obviously I think that's I mentioned that look the SSG. I may change the sales judgment again from 15 maybe to lower, which I will show you just in a second. Yeah, they did talk about the outlook. They was confident it will be about 15 to 20%. Obviously, I don't know if they can still meet that with coronavirus and you know, Brazil is one of the biggest market. I also listed here a few of the announcements. They got to have a new appointed a new executive vice president. Talk about the share purchase. Also, what else? Oh yeah, they issued a lawsuit related to the company direct car business with the North America fuel car business. So yeah, they have a lawsuit going on right now. I'm looking at is to buy this company. As just take a look at this SSG. I'm using the project starting line. I'm using annual because I'm doing annual. So I chose annual right now. And when I first shared my study with you, I gave 15%, but now I just lower a couple more. I don't know if I should lower a little bit more, but let's just say right now gave 13%. And then for the earnings, I just use the default calculated procedures. I looked at the trend, looked at everything judgments. I'm not going to make any changes. I just use the default. And another thing I made a change was when I gave you the first time the study I shared with you last week, the high PE, I was using 29, I think, or 30. I took out the outlier. But now I decided what's going on right now, a few more points lower. And for the low PE, I using the calculation, the 5 years average low times the 12 months, 12 trailing month, and I gave 187. So that gives a buy zone upside down ratio and a 4-to-1. So annualized return will be about 13% use high PE and about 10% use average PE.
So Jay, why did you use the average low PE in your calculation for high price?
Average high price? No, I didn't.
Wait.
The average PE was 29. I used 25.
Click on that fourth, or was it your selected forecasted
low price? The low price, yeah. So average low right now is 18.9. So I just use 18.9.
Okay.
Yeah, that gives 187, which is lower than just about.
I got
it's market, yes.
Okay.
Oh yeah. So
Jay,
so
do you think that with the whole logistics area being under pressure right now, and Amazon, I heard, is hiring, I can't remember how many thousands to try to deal with all of the orders that are coming in and so on. These guys might do fairly well because, there'll be more trucks on the road to get, goods to different places and so on. And so their business might actually see an uptick as a result of the coronavirus.
Mm-hmm. Well, Matt has a concern about lockdown, right? But for me, I felt it's just a temporary,
But lockdown is more. So what these guys do is they have credit cards and hotels and so on for fleet trucks, right? So I don't think that will be impacted very much by the lockdown because goods still have to move, and so that's kind of like an essential part of the economy. And people are, Walmart and all these places are having trouble keeping stocking their shelves, and they're going to see a big spike, I think. And
maybe Matt's concern was just in Brazil. I think did you see his email? He was questioning to me about the lockdown. I think probably he was just concerned about the Brazil. Yeah, I don't think lockdowns. I just felt that it's
Well,
whatever's going on right now is a temporary. It's going to hurt, but for me, it's really the fuel because it's their major revenue, right? 44%. That could. I don't know when this is going to be back up. That could hurt pretty, actually, significant, possibly.
Yeah,
Jay?
I don't think lockdown is going
Right.
to impact the trucking industry. I think
Yeah.
it'll actually be the opposite, right? Because people will still need things. They're going to be ordering off of Amazon and eBay or whatever, and
Right.
home delivery, all of that stuff. So I think the lockdown will help the trucking industry.
Mm. Yes,
Jay, can you
Joanne?
refresh your data? Because today's price is
That's because today's a Monday. That is a Friday's price. It is fresh.
Yeah, can you have data?
I already did. You can't. They always give you the Friday's price. That's the March 13th. Because today's Monday. So they went out for BI. There's a delay. The last price will be yeah, it'll be
Okay.
Friday's price. This is the Friday's price. So today, if you want to see today's price, probably will be tomorrow.
Today it's 210.
210? Oh, even.
Yeah.
Oh, wow.
Yeah.
Okay.
Mhm.
Yeah. I refreshed. Yeah, this is the Friday.
Okay.
Mhm.
Okay.
Okay. So think about it. But at the PE about 30, stock price at this, I will say fundamentally, right? The company still, it's not a cheap company, right? Look the stock price, but we know we don't just look the stock price, but this company, I will say, depends on how I look at it. How much money? If you just look at my personal portfolio, right? I have this, let's just say 10,000. If I have a company, I would like to have more shares, right? Because it's not really cheap company at the 200 something a share per share. So as for our club portfolio, if we have the money, if we really want to invest, I will say, yeah, sure, let's add on more. But
Well,
this is
their
considered as a
sales,
technology. It's considered
their
technology.
sales are about what, Jay? About 20 billion or so.
Yes, 26.
Yeah. So I mean, it's I think they still have a bit of room to go. They're not a huge company. I would say they're kind of like mid-size, mid to large, on large. So and they seem to be running a really good business. I think they're going to have to grow more by acquisition. So
Yes,
they're
they talk about that.
so the fact that they're looking at Brazil and other places, I think will.
Okay, I'm going to interrupt because we have half an hour to do at least 3 more studies.
Okay.
Reports.
All right, I'm done.
Okay.
We can discuss
So,
more later.
John C.
John C. Okay,
Would
I
you-
make a John Caddison
Yeah.
presenter.
For Schwab.
Okay, good evening, everyone. I'm doing Charles Schwab. They're in the capital markets industry and financial services sector. They're mainly known as being a discount brokerage. However, a lot of what they do is similar to being a bank now, as you'll see when I talk more about their business later on. So this time I did get a 10K, and Jay helped me out a little bit with presenting this report. This price, I just kept the current price, today's price in here. It's been updated a couple times since the price has dropped and dropped and dropped. So right now it's 30.56 as of today's close. And there's near the 52-week low, and there's the high. This I just, of course, you just pull this from the SSG. The current PE is 11.45. That is updated as of today. So that's pretty low for any big stock. Then here's some data here. Revenue growth down the quarter, but up over the year, year over year. For current assets and liabilities, I just was going to mess this up, so I'm glad Jay helped me with this and to get this right. The current ratio is pretty high. I'm not sure if banks have a higher current ratio than other businesses. This one's pretty high. Okay, so Hanny asked me if for the free cash flow, you can see that it dropped both fourth quarter and year over year. Hanny asked me if this is due to acquiring TD Ameritrade, another discount brokerage, which they acquired sometime in, I believe, in November. I think I wrote it down. I wrote it down later on in this report, but I don't think it was that, because that was an all stock transaction. I don't know much about mergers, but I believe if it's stock for stock, you know, and the TD Ameritrade shareholders get Charles Schwab stock, that it wouldn't impact actual cash, you know. So I did look at the annual report and try to decipher the cash flow statement, but it was a little bit difficult to determine what some of these things meant. Now you can tell, let me get this down, you can tell that, why is it all in that color? Okay, so you can tell that this right here changed. This line right here was a big change from year to year, because free cash flow is net cash provided by operating activities minus, in this case, they call it purchases of equipment, office facilities, and property. There's different ways to calculate it, but that's one way. And the way we verified that Morningstar had the same figure. So this one changed a lot. You can tell. You can read it if you can read that. And then this one also changed a lot and led to the discrepancy, the change, not discrepancy, but the change. So payables to brokerage clients seems more easy to understand. It seems like they owe more to their brokerage clients right now in some form or another. But this investment segregated on deposit for regulatory purposes, don't know what that means. So I have to look into that further, maybe Google what that means. It was obviously providing a lot of cash in 2018 and taking a little bit in 2019. So that's all I could see for that. That's all I really know. If anyone knows how to interpret those better than me, that'd be great. If you could let me know when I'm done, or if you want to chime in, that's fine.
Jane, do you know?
So
Jane?
Investment?
Yeah, cash investment.
I don't know.
okay, yeah. So they had an excess of cash in 2018 due to that, and we're not sure why. So moving on then, if no one knows, we'll move on. But the growth rates, 10-year, 5-year look pretty good. Quarterly and trading for quarters is only 5.8%. If you just want to skip to the SSG for a quick second, I'll show the quarterly data, and you can see that since 12/18, the earnings have been good but falling all the way down to 9. The sales have been good and then falling down to 5.8. So they have been falling recently, and so that impacted my forecast. And I did recommend a buy. I should have said this in the outset, but I did recommend a buy. But looking at these numbers now, I'm thinking that probably based on what Better Investing recommends we invest in, is just growth companies. It's cheap right now. This company, it's got good fundamentals, but it's not a growth company, it seems to me, anymore, at least for the time being. So I probably would even not even switch to hold, but switch to sell if it got in my head, you know. So that's what led to that 4.5, because I just went lower than 5.8 pretty much. And then this one is a preferred procedure. I just changed that actually. I'm sorry if you're looking at my SSG that is on the email. I just changed it. So I go in depth with SSG later in what I'm talking now. But so all these are up and down, which is all positive. I pulled some of this from last month with their projections. And some mergers, acquisitions, divestitures. Big acquisition with TD Ameritrade in the second half of 2020 for $26 billion, an all-stock transaction, as I said. And then Schwab acquired 90 billion in brokerage accounts from USAA for $1.8 billion. They paid them that. Then that means is they got $90 billion that they're going to manage for investors that used to be investing, managed by USAA. Now it's managed by Schwab.
So John, do you think like these the TD Ameritrade acquisition and some of these other acquisitions are going to strengthen their growth curve?
Well, it might. I mean, a lot of their revenue now is due to net interest revenue, like a bank.
Okay.
I'll go through that right in a second here. Right, this next bullet will describe that. But and of course, with a discount online brokerage, well, Schwab has retail, has brick and mortar locations, but I mean, a lot of their business is done online, I'm sure, and so is TD Ameritrade, I'm pretty sure. So there's a lot of cost cutting that can be done, I'm sure, and a lot of accounts that were gained in the merger for Schwab. So it could help them to. They're probably the biggest player now, I believe, in discount brokerage, and they could. They're even bigger now with TD Ameritrade. So the big news, though.
John, you're doing.
All heard about this. Go ahead. Okay. So big news. You probably already know about this already.
John, I was just.
Go ahead, Bernard.
I was just reading an article by Charles Schwab, and he's kind of a visionary. What he's looking at in the future is to sell partial shares. So if you can't afford Amazon to buy one share, maybe you could buy a half a share or 4/10 of a share. So that might be another way for him to expand into getting more investors involved. I'm not sure how that will work, but he's always looking to democratize and make investing more available to everybody. And another thing he's going to do, and I think they're already starting it, is you can buy fractional shares. But that's just a side note. Go ahead with your good report.
Yeah. Thanks. That's good. I think they may know how they're going to do that, just based off other people that have done it with Berkshire Hathaway when it was just the A shares. It was just Berkshire Hathaway. But in October, big news, you all know about this already. Schwab dropped fees to $0 for stocks, ETFs, and options, the base fee on options. TD Ameritrade and E-Trade made the same move shortly thereafter, or at the same time, maybe. However, commissions revenue was $549 million in 2019, only 5.12% of total revenue. In 2018, it was 6.76%. And I wrote down the page number. I can show it to you. If you give me a moment, so I can get to it quickly. This method. Maybe I should just try and scroll up. But there's a nice table that shows you how much each of these things contribute to net revenue, and it's actually not that big. You see here's it's called the total net revenues, and what I want to point to is right here, because this is commissions. And they cut it off sometime late in 2019, so it went down, of course. But when it was going full steam ahead, it was 7% of total net revenues was commissions. So they're cutting that out. Obviously, that's going to hit them in the revenue department, but they're hoping that more people will put their money with Schwab, and interest revenue can go up because they'll have more cash that they can invest when people are holding it. Side note, or maybe not side note, but a note is that with the economy, with the market going down, many people are going to take their money out of the stocks, but they might take it out of Schwab and spend it or whatever on vital goods, but they might keep it in Schwab and leave it in there as in the cash account until they want to get back in, and that could potentially lead to more net interest revenue for them, for Schwab.
Just a quick question. So we still have commissions in Canada, but when you say commissions, is that for buying and selling stocks and options, or did they just eliminate? They just eliminate the commissions on stocks or on options as well?
I don't do options myself, but they call it option base fee, I believe it was. The commissions on stocks are gone. The ops are at Schwab, but the commissions on base fees I believe are for options are done as well. I forgot where I saw that now, and I don't. It's going to take me a while to find it if I look for it all in this report. But it was kind
Yeah, I
of
think
breaking
probably
news.
it's still there because the options fee is much higher. I think it was like a
Yeah.
$35, much higher. I think probably remains.
Yeah.
For Schwab, the commission for trading stocks, it was
Okay, here it is.
like $6.95, about less than $10.
So if you guys know what base charge means, you can figure out what's gone now, because right here is the sentence that I would look at.
Okay.
Oh, okay.
Well, I should become a U.S. citizen or something, because I can buy Canadian stocks for free here. But no, the reason I use we actually have access because TD Ameritrade used to be owned by Toronto Dominion Bank, which is a Canadian bank, and that was their foray into the U.S. And so I had access to their trading platform, Thinkorswim, and they make a lot of money, I think, off of these options. There's a lot of people use Thinkorswim as an option trading platform.
Okay.
So I don't think this commission issue is going to hurt them a lot. They're buying TD Ameritrade, and Ameritrade has, a huge presence in options trading.
Okay.
So
Well,
they eliminated the option base charge. I thought they didn't. So they did remove that.
Yeah, I guess if that's what that means.
Based on what you just pointed out. Okay, I thought it didn't. Okay, that's good to know.
Okay. So the last bullet I have here is that they added 142,000 new brokerage accounts in October, which was an increase on September. A big increase in September, but not that big on October of last year. So, but bigger, still bigger. So that's probably a boost due to the reduction, the elimination of certain commissions. And then I'll go to the SSG. I just changed this up. I'm sorry again that I changed that at the very end, but so you can see my forecast for there's a graph, and it's up, straight, and parallel, but and there's the up, up, down, up, which we like to see. This is return average assets for a bank. 1.19 is average or decent, for a bank. It's what we learned from Ross Meredith, I guess, that Jay shared with me.
Right.
And so forecast for earnings, I just put 4.5 because, like I showed you earlier with the quarterly data, we got earnings going down 11.1 to 5.8, and just reduced it a little bit. And then preferred procedure for this just recently changed. I saw that Hanny had a higher EPS growth rate than his earnings growth rate, or his revenue growth rate. So I switched to preferred procedure. I had a lower one. I'm going to one that's in your email, but
I have a quick question.
Procedure.
So that's not always. You can have, for a period of time, you can have a higher earnings growth rate.
Sure. Yeah.
Yeah, if you're cutting costs and so on, but that's hard to maintain over a long period of time.
Yeah, do you know any reasons the 2019, the 4 quarters, the earnings, why are they dropping quarter over quarter?
I don't know. We have to look into that.
Okay.
Go where?
Go to the quarterly data, the graph you were showing.
Yeah.
I'm just curious what happened to the last 4 quarters. It was just doing fine.
Okay. Yeah, I mean,
that could be the it could be the acquisition.
Acquisition.
Yeah.
Okay.
Okay. Well, back to valuation.
Do they pay dividends? Oh, they do. Nice. So today's price is $30 shares. There are so many good companies right now to buy.
Yeah.
Okay.
Of course, as Jay talked about, this is as of Friday's close. So Monday's close, they dropped to 30.56.
Yeah.
So they dropped some more. They're cheaper now, and you like them more now, I would imagine, because nothing's much changed in business. But okay, so forecasted high is just I actually used average PE plus the IEPS forecast, and so I chose average PE to use.
Can I look at the PE trend very quick? Just a second. When you say average PE,
Okay, sure.
you say using the okay, high. Oh, it's the average PE. So what if you take out 2019 high PE, take out
Okay.
the outliers?
And anything here, or just leave this here?
You on the low P, yeah, you take out the high ones, I supposedly. I think you are fine, even if you are just be so conservative using 23. Yeah, I think it's fine. When you say average P, I did not know what you meant by that. I thought you mean
Jay,
average high P.
Jay, would you
I
not
just meant this right here.
take out the 34 as an outlier?
For high or for?
Yeah. Yeah.
Well, because 34, 32 pretty close. That's why. But look at the
But I mean,
Johnson.
I wouldn't take out the 19 because, you know, if it's kind of going down. So recently, that's kind of what it's been. But
Yeah.
you know.
But what he's using the average PE, which is high and low average 23.5. So using that number give you $78, 79. That still give us a buy. That still is pretty good,
Mhm.
right?
Okay,
Yeah,
we need to.
Yeah. Okay, so one more thing then.
So
I guess
for the low price, how did you? What did you calculate the low? Okay, what did you use for
No,
low?
I did calculate the low because it's just so it's just dropping so much. I just think I can't just keep the low that's going to offer me here because it's going to drop below that probably the next few days, and that's just reasonable to think. You know, I don't have a precise figure.
Okay, so you did not calculate. Okay, you use that.
And
okay.
if you want to buy, you know it's going to drop. So
I like the upside down ratio 32 with that very conservative number you gave. That's pretty good. Yeah.
Even higher in today's price.
And
I did a quick math here. You look at the 4.58 if you do the math on the upside down side. That's see, this is forecast higher than the current low. That's you know, and that's that, and that's that.
Yeah.
So that's the current calculation. So I mean, summary I would say is that it looks like a cheap company that's strong. It doesn't look like a growth company to me anymore. So that's the question I have for this club. Would you want to invest in this stock who's currently cheap but maybe not a growth company anymore? So that's all I have. Thanks. Any questions, or I guess we should probably move on with
yeah, let's move on and then back if it's a buyer or if we decide to buy or sell. How's that sound?
Yeah, sounds good to me.
Okay. I am going to make myself the presenter because of AQN.
Okay, Joanne, I'll be the timekeeper, and I'll keep you on track.
Okay,
Joanne,
you can kick me out.
Sorry, your time's up.
Okay, let's see, who's next? Who's next? Oh, I'm the bad guy, but
No, I'm just joking. I'm just joking.
Mine is a Canadian renewable power company, Algonquin Power. I didn't know anything about this before I was honored to be the, keeper of the or watcher. So a very interesting company. Their emphasis is on renewable green energy, although they do. I guess they feel that natural gas is, better than oil. I don't know. Matt had questions about their. Go ahead.
I can tell you why that is, but we don't have enough time.
Okay. All right. Okay. So anyway, yes, thank you, Annie. Okay. Just with this recent volatility, it seems like the pricing the way it is. When I first assessed this stock that I would buy it once it went below 14. I think it was $16, and today it's 11. As an FYI, we bought it at 10.53 in 2018. So, like a lot of stocks we've looked at, taken a good hit, but I think it's the the fundamentals are very good in this company, so the buying opportunity. So the current P is, this is what I like. Jay taught me at one point, was that the current PE versus the average PE, and it's lower than the average PE. That means the company has retention. So that's an indicator for me. And then it's had good revenue growth, except I guess this last year. And I have to have numbers because Hanny, I might have gotten my numbers wrong. So I'll double check that. And the increase in total liability due to the increase in long-term debt. They're in a I guess one of the ways that these type of companies grow is by acquiring other companies. So they've acquiring a number of companies. I kept
they're also they build new generation capacity, and that typically they have to take on debt to do that, so they're a utility. But
okay.
Yeah.
Okay.
Which is
Kept
it's okay.
Oh, it's okay. Okay.
Yeah.
So their forecasts I kept the same. They looked reasonable to me. Actually, I think this should say down, down, up. I should have that down, down, up. And we'll take a look at the SSG. And I liked what Hanny did. He took these Zach's estimates and he just cut and pasted them right into the guidance, because it shows a number of estimates and kind of what they estimate for it over the next year. This was the earnings. So we've selected 8, and the earnings can seem like it's a little bit more conservative. And then with the mergers and acquisition annual report, they indicated the types of companies they were acquiring. And let's see. Oh, so I came up with a buy on, let's take a look at the SSG. Okay, so it's is there a reason we struck these out, Hanny? I think I just
I think
old.
we looked the last 5 years and the last 10 years.
Yeah.
Okay.
Yeah, we're just looking at the last 5 years.
Okay. So it doesn't, it's not exactly upswell, but it has an upward trend. My estimates are the 8 estimates kind of flatten that out.
Well, they also, like recently they've been they have a program to spend about 7 billion in capital to develop new wind projects, solar projects, and so on. And their objective is to maintain the dividend at a certain level. And because they have so these guys basically signed a contract with various jurisdictions that they operate in, and here in Ontario they signed a contract with the government, so they're going to be getting recurring revenue, and it's almost guaranteed. So the fact that they're taking on more debt and building these projects is not a negative, I think, because they're the revenue is more or less guaranteed. The people need the power, and it's backed by the government. So
Okay, good to know. Valuation. Let's see. Okay, so I know some people strike out the highest or the lowest. I like just because I think it's indicates a trend. So for the high price, I just went with the high PE.
I think you can cross out a bit more. You can lower a bit more because look at the trend is also trending down, right? 2019, actually half of it compared to 2018.
So take
No, you don't need to take it. What I'm saying
No,
is
I
you're
don't.
using
Yeah,
26.
yeah.
Yeah, you can
Yeah,
even
that's
just
what I
use,
say. That's what it's like, kind of indicating the.
right. You can use
Okay.
like 23, see what happens. You know,
Oh,
the 2019 is only get PE is 14, right? So right now you're using average P 26.9. What you could do is just use, let's say 23, you know, see what happens.
well, okay.
Mhm.
And Roy told me that once we purchase the stock, we want to
Mm,
be looking mystically.
right.
So I don't know. When
But
I'm
for me,
doing
look,
a stock stud, I try to look at give it a tougher, be more, like scrutinize it more and have it be on the lower end. With the S buy the stock, we can have a more optimistic view towards it.
right. So, but for me, I do the same thing, but what I only at my judgments at the sales and
Mhm.
earnings, I will be a little bit more, give it more confidence.
Okay.
But for the PE, I will still be more reasonable.
Oh,
So
more conservative. Okay.
more just reasonable because look, so today's price is about $13. Just say Friday, right? 13. So
It's 11.
11, right? So our goal, right, is if we take BI practices that double our money in 5 years, right? The next 5 years will be $26. So even if you can give me 26 next 5 years, I'll be happy. I don't need to get, if you can give me $41, even better. But let's just say my goal only look at it, can this company double my money next 5 years? Right. So that's why I
Okay.
say, Joy, if you even give it 23 P, the high P 23, I think it's still
Okay.
pretty good.
Let's try 23. It's still going to be good, I think.
That's a
Yeah,
good.
still, yeah.
That's a
I
good.
think 23 is still too high because you look at 2019, it's only 14. The high P is only 14.
So let's just say,
Maybe
assume your
there.
sales earnings projection is what we wanted. You can totally lower this high PE more.
Yeah,
Yeah,
because it's trending down, you can see.
yeah. Like,
But somehow it's losing the favor from the
yeah,
investors.
right.
Okay.
So I
And
don't
then
really take the
I think.
average
I think
quickly.
So I agree, but I think the reason that the PE is going down is because when they started, they had a certain number of projects and so on, and they bought certain utilities. Okay, and then their revenue was kind of flattening out, so they put in place a capital program to build more projects, hydro, wind, solar. And I think for the last few years, they've been executing on that capital program, and so their earnings have been going to balance the books. I think once they finish those projects, then you're going to see a new revenue stream that's going to sort of increase. But I agree with both of you. I think if you lower it, it's still. But the important thing is to kind of understand what they're doing in the background. What is it that they're doing to grow their business? And I think these guys are have a pretty solid plan to grow the business. How the stock does and the PE in the near term, it's doesn't matter. I think it's a pretty solid company.
okay. So for the forecasted low price, I type market low. Yeah, which was 9.4 in 2018.
So just to follow up on what Jay said, like if you use this 20 PE and it's around $10, $11 right now, the stock. So today, so in 5 years, you're going to triple your money. So that's a, I think that's a good way to look at it, Jay.
Yeah. I'm just aiming double my money, right? If triple,
Yeah,
even
yeah.
better. But we just want to targeting to be doubled, basically.
Yeah, 15%. What we usually target. Oh, and they also have a a dividend.
Great dividend.
Pay a
Oh,
dividend.
This
yeah,
company, yes.
they pay dividends. I like this company. It's having a rough time right now with the prices really drop, but
It's temporary. It's a great
yeah,
time. It's lifetime.
yeah.
And
Okay.
I don't understand. So yeah, if I never understood the BI better investing principles, I would be panicking. Oh, I want to sell. No, I would just sit tight, just buy.
It's
you
gonna,
know.
and because I feel like the small companies have a slower recovery. So, and the medium and larger companies will have a faster recovery than the small companies. I know we want to buy more of the small companies, but I think if they've got battered during this this cycle, they might be a little slower to come back versus the medium and large companies.
Medium company is the meat of the
Yeah.
growth, and
Yeah.
so and that's why better investing recommend to have 50% of your portfolio. Small, large, take 25% of a portfolio.
Okay.
So when I studied this company, Joanne, you mentioned about the sales earnings, pre-tax profit, now up straight parallel. I was researching.
Oh, yeah.
I want a utility company. I looked many of them, and I couldn't find any with that kind of line because that industry is very cyclical. So this is the best line I could find. I remember I talked to Henny. I said only one thing. The fundamentals very strong, management, all that. Only one thing I said I'm kind of disappointed was if you look at the price. You know, for the 20 years, 10 years, the price was all about at what highest ever was about what 2020. It was the highest. It's not really significant growth, and I think Penny mentioned to me that they pay great dividends, and it's because the type of industry they are not going to grow tremendously.
Okay.
Right, Henny? Refresh my mind because I remember
Yeah,
this
no,
company.
like so utilities don't grow. I mean, these guys can grow a little bit faster than your typical utility because they have some room to grow. And the other thing is they're a public utility that's integrated. So they have water and gas and wind.
And solar.
So solar. So they have a mix of things. And they're buying smaller utilities in different areas. They just bought 2 in Canada. You know, so I think they have an opportunity to grow a little bit faster than say something like Duke Energy that has, you know, nuclear power plants, and you're not going to build, you know, a lot of those big projects, you know, anytime soon. So these guys are more nimble, I think, and they'll grow a bit faster.
Yeah. Okay.
Plus, their head office is within walking distance of my house. So.
Oh, that's right. Okay, so I'm going to interrupt myself and say it's time for the next presenter.
No, I think you should go on a bit more.
Yeah.
Should I go on a bit more?
Yes.
No, do you want to do the other one, the Heckle?
Oh, Heiko. Okay. No, well, Heiko was a whole at the time, but let's let Mina do his, and then because mine is a kind of a now Heiko.
Okay.
I'm happy to cede some of my time if you want it.
No, we can come back. Mine is just a quarterly. Yours, we have to do the annuals.
Oh, annual. Okay, sorry.
Fair enough, absolutely.
Yeah.
So I'm just sorry, apologies. I'm not using my normal laptop, so I don't have my sign information for Better Investing, so I only have the PDF of the SSG. So I mean, if somebody might have to jump in and pull the live one for me, if that's possible.
Okay.
Sorry about that.
That's okay. Let me see. Did you upload to the folder?
Yeah, the ITK file should be up there as well.
Okay. I will look.
So
you can go ahead.
Which Domino's.
Yeah, so doing Domino's Pizza. This is my first review of the company. I've taken it over from a different member. So start off with the annual report. It looks like, well, Domino's had a fantastic year. The price has surged. There was a very short period in the third quarter and going into the fall and winter of of 2019 where the price really surged. But I guess we'll talk about that more specifically. So Domino's, of course, as we know, is national and international pizza chain that focuses mostly on delivery and pickup orders. 55% of their business model and revenue comes from delivery, and that seems to be where the company is making most of its strides at the moment. Besides what they call fortressing and building new locations, they've invested heavily into new technology and GPS integration with the order system so that they can kind of deliver pizza as fast as possible and be the market leader on that end. The other component of their business model that they tout as a reason for their success is a strategy called fortressing that involves building several Domino's location in a small geographic area so that they're able to service the community in much shorter times. So they'll open 5, 6, 8 locations in a few kilometer radius, and that way they're able to get to everybody within a really short time. So just looking towards some of the numbers we can see here. I mean, we purchased it in October of 2019 at 257 a share, and it closed on March 10th at 343. And that's down from the 52-week high of 381. And those gains were all, like I said, in the fall of 2019. We saw a huge surge. Domino's reported its numbers, its fourth quarter numbers in February, and they exceeded expectations in both revenue and earnings per share. And revenues, again, they attribute that to the continued net growth of new locations in the United States primarily and international. They've also reported net growth. Now, they've reported a smaller net growth in their international store openings than the previous quarter, but it's still growth. So, I mean, I think that could be taken in both ways. The other major factor I found is that there was a big, and I mean, I'm not too familiar with how exactly it works, but there was a share buyback and a significant one that resulted in, from what I'm reading, in that boosting the share price and the market price of the company. I'm going to probably ask somebody more knowledgeable here how that really works, so maybe I can understand that. But apparently that is one of the reasons driving the value of the company as well. So looking at the SSG numbers, I think is probably where we should go. Well, I mean, let's look at also at the PE ratio. Currently, it's at about 35, and the 5-year average is 30. So that led me to come to the conclusion that the price is quite high right now in light of what the company is offering. Though everybody seems to be happy with the fundamentals. All the analyst reports and kind of my market research shows general satisfaction with how the company is doing. Management. It also seems that they've increased their liquidity, but they do have a very high debt ratio that they need to really focus on this year. And management makes that a point in their annual report that there's going to be some more prioritization of paying down that debt. I couldn't really find, and I didn't look too deeply. I couldn't find really a reason for the debt. I didn't see there doesn't seem to be major acquisitions, but there were some references to the investment to the infrastructure, the GPS system, and the delivery model. So I'm thinking there might be something there to that. So historically, the 5-year growth rate of the company is 13%. In the previous SSG, we used 9%, and for this SSG, I used 8%. Now, part of that might be a little reactionary to kind of the market shutdowns, even though I think this business is pretty uniquely equipped to deal with a lockdown because, well, people love their pizza. So anyways, I set a reduced forecast. Management's guidance suggests growth rate in the next 2 to 3 years of 7 to 10% in their revenue. So I picked a kind of a middle of the road number with 8%. The historical EPS earnings per share is 13.2, and the previous SG had it listed at 12. I've stayed with that 12 number based on the BI member sentiment and Yahoo Finance and Market Watch, I think, also kind of found in that range, so or predicted in that range. So I thought that was fine to leave it there. So I think that is the majority of everything is. So
I
ultimately,
have a question.
yeah.
Any reasons why their return equity was all negative? Return equity, like 10 years all negative. What does that mean for this industry?
Yeah, I mean that's a good question. I'm not sure how that's the case, because this seems to be the market leader in the industry. So you're right, it's probably maybe it's an endemic of the industry, but I'm not sure.
Who presented this company? Was it Roy or you, Mina,
I
or
think,
Andrew?
no,
Somebody.
I believe it might have been Roy. I didn't do it. I've taken it over. This is my first look at the company.
I'm
So
curious. Okay. You carry on. I'm just taking a look at his first. I'm just want to know why the return equity is all negative, historically negative.
right, and I mean I guess I focused because I mean I don't have the experience that many of the members here do, but I focus on the upward parallel shape of the graph, the fact that they are exceeding expectations and targets, and thus increasing their value. So I just took those to mean, along with just general analyst sentiment, that it was a well-managed company that's doing well. So I don't know. I personally may have written it off as something I just didn't understand at this point, but I didn't know if it significantly impacted how we should assess this company, given that we bought it, that being the case. But so using the numbers that I suggested, being 8% for the sales growth or revenue and 12% for the EPS, I came out with a hold on this company. The real reason for that is really the valuation where it is now, and it's not really, it doesn't speak to the strength of the company. It's really the fact that it's quite expensive at the moment, and I just don't see. Well, the upside down ratio is 2.2 to 1, which is below our 3 to 1 target. So right there, it falls in the hold range. But I also felt that the company is quite expensive right now, and that it doesn't leave very much room for growth. Because I mean, I'm not sure how high we expect it to go. So, and I thought, given the the current economic climate, we might be able to buy it at a better price and actually get a reasonable return on further investment in the company. But I mean, I also did debate the idea of a sell. I mean, it was a very big spike in the price. Maybe we take our profits and invest somewhere else. But to me, it seems like the company is growing well, that there's no clear reason why it won't continue to perform well and be a market leader. So might as well continue to hold it. But I leave that to, maybe that's up to discussion there, and I'm not sure how we should approach that question. The only time I ever think about a sell is I think about a sell when a company is, I think it's becoming worse or the fundamentals are bad, but there is something to be said for selling and taking the profit. At some point we have to realize some gains. So I'm not sure what the group thinks about when's the appropriate time to sell. Yeah.
Mina is 286 today, so it's dropped more.
Oh, okay. Well, in that case.
Also, I would not sell right now. I would not sell anything.
No, I would.
I will wait. Plus, we're not holding this long enough. We bought this in October 2019.
Right.
Yeah.
Just bought it.
Yeah, it's only like what, 2 quarters?
Yeah, I was just shocked by the spike. I mean, it went up $120 within those few months, like per unit. I mean, it hit 380 at some point. So I was just so surprised by that.
I don't understand the ROE, but Roy did mention about the debt, because it buys equipment for its own company-owned stores and franchise, and leases the equipment back to the franchises. So that was a debt issue. He said that should be considered as a non-issue. But I do not understand the ROE. Why in this industry the ROE is negative? I don't understand that. Return equity. He didn't say. I just look at his first cut. Yeah.
There's a reason on pizza.
I don't know. Yeah. Okay. So this company is a whole then.
I think so.
Okay. Yeah. Okay. All right.
The reason for
Next.
negative return on
Mm,
equity
mm.
is that, pizza dough, and in Domino's case, they make it travel. So when the dough travels, you don't have return on equity. That's supposed to be a joke.
That's funny.
Okay, so do we want to look at my quarterly or not? Because now a crazy buy zone because the prices dropped so much.
Which one
I
is
didn't.
yours? Heiko, is it hold?
It was a hold when I did my investment, but now it's
Hi.
buy.
Oh, okay. But do you recommend to buy more?
Sorry,
Do you
what did you
recommend to
say?
buy more? Do you recommend to buy more if it's in a buy?
Yeah, yeah.
Okay. Which industry is Heiko? Is it also technology?
It does airplane parts.
Aerospace?
Aerospace. I'm sorry, aerospace. Although I don't know that the people are saying because people aren't traveling now, but again, let's just look at. I did the quarterly reporting. We can look at more of what the SSG says. Okay, because we've held this company for a while, I think.
For a while, yes, I presented.
Okay,
That was,
I'm
I
gonna
think it was the first, yeah, probably 3 or 4 years.
So I mean, the
Line,
first
so
thing
beautiful.
you notice is closing price
Uh-huh.
below the bar here. So it's really taken a hit
Mm-hmm.
price wise,
Mm-hmm.
but everything looks good.
We bought it in 2016. Look at that. We're not
Okay.
losing money for
Wow.
sure.
So, and the price earnings ratio is good. The earnings jumped up in 2019. They do
Wait,
pay a dividend.
your upside down ratio is what? What's the
I
upside
know,
down ratio?
I don't, but I don't know how to figure, I mean, that
No,
price,
something's wrong. Yeah.
okay, so let's
No,
look at it.
your high P, your high price is too high. 219, that's a 70. Yeah, something's wrong.
Yeah,
So first,
so,
let's go back to
you want to go back to my estimate?
yeah, this. So you did not change. Are you okay
didn't-
with the sales earnings? Is that what you wanted? 8 and 14?
Yeah. I didn't change them.
Okay, it was okay. Okay, and then you go back to your second page, and you need to change your.
I guess the average high PE, that's the only thing to change here.
Yes, 219. 219 is too high. It's way too high. I think
So maybe
your earnings is also high.
maybe I make it. Maybe
What
make
if
this
you
one.
take what if you take it as like a 34? Because you look, 2015, 16, 17 is about 30. Yeah, what happens?
Still.
Too high. Actually, hold on. Can you go back to your first page again? And the quarterly, I'll just. Can you take a look at earning per share and the earning per share box?
Right here?
Yeah, the second, the earning per share earnings. Preferred procedure.
Okay, that's my dog. Hold on.
Okay.
What do you mean? What box
Can
do
you
you want me
just
to
click
look at?
the second, the green box? The second one. Yeah, that one. So look, preferred procedure says a 6.1. Are you still giving 14 is based on your research?
That's what the estimates. See, the analyst estimates were like high. I just kept the 14. Do you want me to use a preferred calculation? Or I can do, let's see. What I was taught also is earnings follows sales. So I go 8.
Okay. All right, and then your back will change. That's better. That is better, right? But I don't understand your something with your upside down ratio. I don't know what it is.
But
Oh, you know what?
what's the story behind these guys? Because I think, like, you know, the problem I have with doing SSGs is that I can make it come out to whatever anyone wants it to be. But I think, like, you have to understand the business and how that's evolving, right? And like, for me, these guys are in the aircraft business, and we all know where the where the aviation industry is right now, and for the foreseeable future. So I think, they're in servicing of aircraft. They make components. They do a little bit of military. I'm not sure what the percentage is, but there's been, half the airlines have grounded their fleets, or significant portion. And
I don't think that has.
But that will
that's
be
a little different.
temporary, Hanny. That don't it's
right,
going to be
but
temporary.
yeah, but how temporary? Because
Let me take a look.
if if you knock out 2020 and 2021, let's say, if those are, then the stock is going to take a major hit going forward, right?
They actually working.
It already
they
has.
Okay, I'm going back to how they make money, Henny, because I'll try to refresh my mind how they make money. They are making money, have a flight support group, design, manufacture jet engine, aircraft component, replacement parts. Another part is they doing replacement. Another one they are doing is electronic technology group. They design and manufacture mission critical niche electronic stuff, like which that is used for defense, homeland security, medical, space, and telecom, and aviation, broadcast, those kind of things. So, sales, they have about 60% in commercial aviation and 23% in defense space, 17% in medical, electronics, and other. So I don't know. Just looking at the sales earnings pre-tax profit in the company, the upper street parallel, the graph looks pretty nice, actually.
Yeah, but that's history. So, like Delta, United, American, they're all cutting back like over 50% of their flights. So if those flights are grounded and they're sitting on the ground, they don't need any maintenance. They're not buying new airplanes. You have the Boeing 737 MAX is grounded and not coming back for a while. So I don't know what how these guys would deal with all of that. And what's their debt like?
Yeah. We are not. So the reason why I'm helping Joanne to fix SSG is not because we want to make this to a buy. It was because the upside down ratio was out of a whack. We were trying to.
And it was because the selected forecast price was, because it's at 70 right now. It was a selected low price 70. So that's what caused it to go. Yeah.
All right.
Yeah. I made it to the most.
We were not trying to make a mechanics to make this to a buy, Henny, which always is the wrong thing to do. But we were just trying to figure out the upside down ratio.
Yeah. Okay. I think we can move on from here. Yeah. So do we have anybody? I think that now
on the other hand, but on the other hand,
go ahead.
Hello. Oh.
We're listening.
On the other hand, if Trump gets us into a war, there would be more sales of this from this company because they have a military component. Yes. And it's possible we could have another war with Trump running. That's a possibility.
That's one way to stimulate the economy for sure.
Yeah. We don't know. So that's one of those things we don't know. So let's talk about sales. Anybody have any motions? We have 20 minutes.
I'm not really BJ's restaurant. We didn't present that.
Oh, we still, okay, we still,
yeah. We still
We want
need
to
to
look.
go through.
Yeah.
Does anybody have it pulled up?
No.
No.
Should we
I think
look?
I think we should push it to the next month.
Okay, I'm okay with that.
Okay. BJ's, and what was the other one?
Air lease.
Air
Air
lease.
lease.
Okay.
That's another aircraft.
Yeah.
No, that
that's
was
going
really,
to-
yes, that's a
But
smart
that's
idea.
leasing the entire, mine is more components, and my,
Yeah.
with all those planes grounded, they could be working on their maintenance and getting these parts.
Yeah.
Okay. So do we move on? Buys and sells?
Sure.
Sure.
20
Okay.
minutes.
I make a choose sell IPGP.
I second. Let me, let's do it through iClub, because Tom was saying he has he has a bit of a problem because we don't write these things down. So when he comes to buy something or put in cash or what have you, there's no record of it. So I think putting it through iClub, we can pull up right away what we. The only problem is with iClub today is that we have a lot of members missing. So I'm not sure how the voting is going to work.
Isn't it by the people present?
Well, there's simple majority and 2/3, 3/4, unanimous. So, but
Simple majority.
I'll try it and see.
We have
So
three people
IP,
missing.
GP, and motion made by Joanne.
So
Bernard.
I'm
go
not
ahead.
able to do that my club stuff.
Okay.
Okay.
I would follow.
We'll count for
somebody
you.
recommended. I'd say yes. Sell.
Okay.
Sell.
Sell
I'd
it.
say
Okay.
sell is okay with me.
Okay.
I'm going to do simple majority.
Yeah, I will also do sell.
Hanny, can I make you the presenter so I can vote?
Sure.
I can vote privately.
Show my screen. And save motion and notify. So you can you should be able to you
It's
should
my
be
icon.
getting an email, or if you log in, you can just do this right here. So I'm going to put
Sorry.
yes.
Okay.
Annie,
Yes.
Okay.
can you
I voted.
can you go,
I
we're
voted
waiting.
as well. It doesn't-
Sorry.
to go to yeah, could you go to add new motion? I want to see that screen. I can't add a motion, so I want to see what it says. Just too curious.
Well, I
Hanny
think
adds
because-
emotions.
I know. I'm just curious what it says.
So you enter the text here,
Yeah.
and then you have the motion, who made it and who seconded, and then
Yeah.
you can change these options.
Right. Okay, thanks.
Jay, are you going to vote?
Yes.
Are you signed on?
Do we
I
have
did.
another motion?
Pass.
Here's something that came up in this champion.
Sorry, Bernard, you're cutting in and out a bit.
Other clubs, when they have money, they put it into a fund. Okay, but perhaps we should consider having our money that we are not invested instead of cash, having it in some sort of a fund to hold it until we invest it. That's what I know
I
we're just
think we do.
virtual, but that way we could have a better return. What fund do we keep it in?
No, we don't keep it in a
Or-
fund, but that's not a bad idea because what happens is, I'm not sure how I'd have to check with iClub how they do the calculation, but so if you have cash, that could impact your return because you have a significant amount that's not being invested. So but I'm not sure if they take that into account or not. I'd have to call them and find out, Bernard. So when we run the report, if it takes into account the cash as part of the return, and you're getting 0 on 27% of your portfolio, then yeah, that's a good point. But if it's not, then it's not. It doesn't make any difference.
Okay.
Thank you.
Any other motions?
I'll take an action to call iClub. Sorry, Jane, did I apologize if I cut you off.
No. I just say, can you just count yes for me?
Oh, sure. Okay, so current motion. So I think, okay, Jay, Joanne, Annie, Mina. Oh, is Megumi on? I didn't know that.
Yes,
Touch.
Megumi's
Oh,
on.
okay. Okay.
I voted.
And then
I
Jane.
voted too.
I'll vote for Jane. Okay. All right. So this is passed. Any other motions?
What
Buy
else are you
AQN.
buy? Oh, AQN.
How about AQ1?
How much AQN do we have?
Oh yeah. Handy, can you
we
just
bought it
show us the company, the pie chart,
Sure.
so that give us some idea. Who else, John?
Oh, 7.3.
Yeah, 7.3. Yep.
So AQN is technology, right? Oh wait, sorry, no, utility.
It's a
utility.
Yeah.
And how many times have we bought it?
I think twice.
Twice. Okay.
Oh,
Yeah. Oh, 3 times.
3
Yeah.
times.
We have
Okay.
$3,000.
oh. How much cash do we have again?
Lots.
We have
Well,
12,000.
I would move.
So we have $12,000.
I move we buy more AQN.
Yeah.
Sorry. So we have 12,000, but
Uh,
after today we're going to add another 1,000, so that's 13. And then we will sell IPG,
Yikes.
which is
That's
2,000. roughly.
2,000.
So that'll be 15.
1,000?
So we're flush with cash.
well, what else is in buy? Fleet Corps buy. Algonquin's buy. What else
Can
is
we
Was
buy?
take-
Schwab in a buy?
Schwab is buy. Yeah.
Can we take? I would say Fleet Corps. I think Fleet Corps is I would vote for Fleet Corps for sure, and AQN, both.
Yeah. Schwab
And
actually.
Schwab.
No, yeah. Schwab is okay.
Well, I would move.
Let's do one at a time. So
Okay, let's one.
Megumi is
I
making a
move
motion
we
to buy
buy IQ.
Algonquin.
Okay, well, I would.
Megumi made
Sorry,
a motion
Bernard,
to
go
buy
Yes.
Algonquin, right?
Yes,
Yeah.
I make a motion to buy AQ1.
Okay, Bernard, you were gonna say something. Sorry.
He's going to second it.
Okay. Voting.
How much are we buying? 1,000
Second
or
the motion to buy AQN.
Oh, yeah. How much? 1,000, Bernard?
2,000. Well, well, 2 is better.
yeah, okay.
No,
So we got to be seconded or what?
That
Very
would
good.
Well, just
How much does that give us? What percentage?
We have
Hold on.
$15,000 to spend.
No, I mean percentage for
Oh,
that.
total?
Yeah,
If
for
we
so
put
that
in
company.
5,000.
I would say like 1,000 because like that would put it kind of see these four AQN, Disney, Facebook, and Skyworks are we're heavily weighted on those four. So maybe 1,000 I would recommend, but I'll go with the group.
Are these all different sectors?
Yeah,
So
this is
I'll-
utility, AQN, and
I'll second the motion to buy 1,000.
okay.
Okay.
What was the third one? We said Schwab and AQN and
Skyworks.
Fleet
Fleet
Corp.
No,
Corp.
the Fleet
Oh,
Corp.
Fleet Corp.
Let's do Schwab first because I will say we should buy more Schwab to the portfolio percentage wise to meet up with other.
Okay, so we want to buy Schwab 1,000.
2,000. I make a motion to buy Schwab 2,000 because right now Schwab you only have what, less than 3%?
Okay.
1.8.
Yeah.
1.8? Yeah, 2%.
But we never voted on AQN. We're supposed to vote on AQN first.
Oh, I thought already passed.
We never
No?
finished with AQN. We should vote
Oh,
on
sorry.
AQN. And then
Go back to AQN.
Okay. And
somebody moved, we buy 1,000 shares of AQN. I second.
Megumi and Bernard.
Yeah.
Okay. And save and
Okay,
notify.
I'm going to vote. Okay.
Can we get in contact with my iClub people? Are they, I know we can, but I mean, are they easily reachable to modify their website a little bit? Because this voting thing, we need to be able to say that members are not present. That's like essential to get this to actually work.
Mm-hmm.
Because we always have to have them be present or it doesn't work,
Yeah.
I agree.
But we had a simple majority on the motion. So if right now, like we have 6-5, so that should work. And then Jane, did you figure out why you can't access it?
Because I'm using my husband's computer, so I don't have a mouse.
Oh, right.
Anyway, I think it's good that we decide what company to buy. And I'm just wondering whether we should hold cash for a little bit while and we can set target price for purchase. Because I don't know whether the market will continue to decline, especially for some of the stocks. They may be very quality stocks and good price at this time. It may go further down because their quality, they haven't come down as much. But if those other companies which don't have as good quality, they have come down a lot. So those who we keep track, they have good quality. They haven't come down too much as compared to the others. So I'm just wondering whether we should set target price for purchase instead of coming to buy now.
Oh, you mean
the problem is
we
can't really time the market. Like, do we know that this down more? We don't.
But we just put it, if it does, we what do you call it?
And also we are going to form a task group, right? To evaluate some stocks. So we have a lot of choices we can choose. We don't have to rush to buy anything now. We can decide which company we think we can buy at a certain price. And we can compare with others we haven't had on our portfolio. Perhaps on our watch list or outside our watch list, we can continue to look at them and decide which one to buy or at what price.
I think that's a wise suggestion, personally.
Mm-hmm. I do too.
Okay, are we done
All
on
right.
this one?
So we're not buying, what are we buying?
Well,
We bought AQ.
does anyone, we bought, we said well, we don't, we can reverse our voting if you want.
No,
there's
I,
We already
because
voted.
I
No.
actually take a
Oh.
different, I have a different view. We've assessed these companies, they're part of our portfolio, and adding to the position is a rush. And we have so much cash that to take advantage of the downturn, I mean, we can definitely do what Jane is saying, but we've also assessed these
Yes,
companies
yes.
right now.
We have $12,000 more to do that with now.
Yeah. Also, we cannot really time the market. We don't know.
Yeah. So
So
I
we are
say,
looking at as today, as we discuss it right now, what
Let's
companies is.
buy.
We are looking at the quality growth
Better
company.
Investing advises you to be fully invested, and we're not.
Because my understanding, I even
Yes.
though I'm not that technical analysis, but my understanding is that because it's overall market coming down, it's not a specific company. So we
Right.
can wait until it reach the bottom and coming up a bit, then we can purchase
yep,
it.
but Jane, you don't know where the bottom is. If you know where the bottom is, then tell me so I can invest all my money.
But
We
she's
don't
saying
know.
that we hit the bottom and the market went up, then you buy what she was saying.
Nobody knows when the bottom
If
is.
it goes up a bit, then we purchase at the time.
Well, we'll know when the bottom is when it goes up.
Yeah.
No. I mean,
It's too
Okay,
late.
so what?
It's too late.
Everything that that I've read is that you have, you should definitely have a target price, and then when you reach that target price, then you buy it. If it's too expensive, you don't buy it. And I think that's why Warren Buffett is sitting on $120 billion worth of cash. And I suspect in the next quarter, when they release their 10Q, you'll be seeing Berkshire Hathaway buying a whole bunch of, things that they maybe were holding off on because the prices have come down significantly. The issue that we have as a club is that we can only do this on a monthly basis.
Good point.
So, if the price, say, went down tomorrow or the day after by another 10%, and I hope it doesn't because I'm getting killed at the moment, that's then you could certainly get in and do that, but we'll have to wait till next month before we buy anything. So, but I still think we should hold something in reserve and do a bit of an analysis and put some target price. Like, we don't own any Apple, for example. We don't own any JP Morgan. These are all like solid companies that have come down quite a bit. Micron Technologies, Home Depot, Costco. There's a whole bunch of them.
I'm concerned about adding too many stocks to our portfolio more, because the ability to watch all those. I mean, yeah, we could look at all these. I'm not sure about adding them. And I also feel like since we did the assessment this time, we should give these stocks a review on whether or not we buy.
I hear you 100, and but I think that also this is why I was saying initially we should look at the portfolio and see if there are better options, right? So, because we made some quick decisions, I think, in the last, say, 6 or 8 months, where we bought a few things we didn't even do SSGs on.
Okay.
So, we might want to look at those and say, okay, do they still, are they good buys?
Yeah.
Decide if we want to do buys now, and then we could talk offline, right, about that plan of yours, Annie. But
yeah.
we should just decide whether we want to go forward with these that we voted on, or rescind them, whatever you want to call it. Rescind the passage.
Sure. Okay. So are there any other motions?
I make a motion to buy Schwab.
Still wish we'd buy a. Yeah,
Oh,
well, I'm hoping.
Guangquan is the motion
Oh,
passed.
did we
Guangquan? I
pass
got
the
confused.
AQN?
Did
Yes,
we
we
pass?
have.
We passed
Yes.
Bernard.
We have.
Oh, okay.
Yep.
Okay.
6-5, and yep.
Okay.
Okay, well, I'll second the motion to buy Schwab. I'll second the motion to buy Schwab.
AQN is a good buy because they come down so much,
Yeah.
but I'm not sure about the others.
Yeah.
How do
Okay,
you
so
evaluate, Jane? How do you evaluate come down so much? What are you comparing?
From the high price for the year.
Oh, okay. What's the Schwab's high price?
So buy how much of Schwab?
Because the Schwab we have what, 2%? Right?
Yeah,
1.8.
2% of
1.8. I will say that's what I learned for Doug Galosh. Anything less than 3%, don't even own it because you just waste your effort to following that
Follow
company.
it.
Yeah.
So I will say by 2000 for that company to make it to 3%. It's worth our effort to follow it, to study, basically.
Okay.
Okay,
Makes sense.
I'll second the motion.
Okay. Cool.
Okay. So,
Hmm,
okay.
not sure. Schwab.
I have an answer from one of our guests, Albert, regarding the negative return on equity for pizza, Domino Pizza.
Yeah.
When you guys ready?
Yeah.
Okay.
Yeah, go for it.
So Albert was saying, I was asking why the return equity was all negative. He said that because their long-term debt exceeds their equity in all the years. And that was why that we see consistent negative return on equity. Because remember the debt for Domino Pizza was very high, was like a 600%.
Yeah.
Remember? Yeah.
Yeah, that's,
Because yeah.
I see
Okay,
that.
are there any other motions? Because if there aren't, I'd like to close the meeting and open it up to the guests because we're running a bit late.
Okay.
All right.
I'm good.
No other motions? Okay. All right. So,
Thank you. No, that's fine. Thank you.
okay. Now, how do I do this, Jay?
You just go through, I will open the mic for them. You just go through
Okay.
one by one.
So the first is Albert Moulter.
Mhm.
Albert, do you have any comments, questions, suggestions?
Am I mic'd in?
Yes, we can hear you.
I know it's interesting. I thought that perhaps when you're doing your analysis and your review, you might focus a little bit more on that long-term debt issue. That piece about, I guess it was Domino's, they have a huge amount of debt. And I did make the comment that if anybody ran their household with that much debt, they would be bankrupt. No, they would be bankrupt because their debt exceeds their equity by 300, 400%. And it's done that every year. That's a very, very bad position to be in. And when you borrow money and don't put it to use to generate more return, you're sealing your own fate.
Yeah.
I think for the remember that he studied that company. He's not no longer with us, but he mentioned, I always looked at his first cut. He was saying the reason why the debt very high for this company was because of franchise.
Well, that may be, but look at the return on equity.
Right, it's all negative all year.
Exactly. I mean, it doesn't mean that Domino's isn't a good company, but boy, I'll tell you, any company that says we're going to spend $1 billion to buy back shares and doesn't say we're going to put $1 billion to repay our debt, something's not right.
Right.
Yeah.
You've done well with the company, I'm sure, and I wouldn't fault that, but only in the matter of evaluating the debt position and the return on equity, like you had indicated.
Right.
You have to take a look at that.
Okay. Thank you, Albert.
Thank you.
That's a good point.
Okay. Next is Bo Horton. Bo?
You want to go next? Oh,
Okay.
he made some comment. He said he has no questions.
Okay.
No questions
Yeah.
for
David
Bo.
Chong?
Okay. David.
He might not be there. Looks like
Oh,
he's
yeah.
away.
He's away. I'm just leave here for a second. Okay.
Okay, next is Esther Drummond.
Hi, Esther.
If you don't have a mic, maybe you can type. See you have any comments or feedback or anything. Okay, I'm just going down the list. Gabe?
Hi, Gabe.
Hey, I don't have any questions, but this is my first time visiting the club. I just wanted to say hello to everyone, and I'm just trying to soak up as much knowledge as you all can share.
Oh, thank you.
Thank you.
Okay.
Welcome.
Yep. Gerald Sindra.
He doesn't have a mic.
He doesn't.
Oh.
Yeah. Okay.
Kay Light.
I don't really have any comments. It was interesting. I own FleetCor and Heiko, so I was interested in comments on those. Heiko, I think I bought for its defense capability.
Oh, yeah, they're in defense.
rather than the aerospace thing. But of course, that situation has changed since I bought it.
What situation has changed?
The aircraft situation. So
Oh.
that, I mean, they're not commercial aircraft, so.
Okay. Thank you. Tom Loftus.
Hi.
Hi.
I don't really have, it's getting late. I don't really have any comments.
Okay.
Thank you very much. All right. We should probably stop the recording, or we did stop it, I hope. Thank you very much. And